I'm Sean Cooper, president and owner of Fit Financial Consulting, LLC, a registered investment advisor. And so far, when talking about credit and credit scores, we've talked about your credit score, how to improve it, how it impacts your interest rates, and how that relates to your credit cards, home loans, and other things of that nature. But your credit line is also really important to you as a consumer. So how much a company is willing to lend you is actually more based on your income, though, than your credit score, although it is a factor. So when you're looking at it, everything from your line of credit for your credit cards to how much you're approved for a home loan is actually determined by your income, debt balances, liquid assets, and your credit score. So income is probably the biggest factor there, but how much you're carrying in debt, especially relative to your liquid assets, would be the next biggest factor, with your credit score kind of filling in the back. Unfortunately, you probably don't have a whole lot of control over how much you're approved for, at least from a credit line perspective. Initially, you may be able to request an increase down the road. And whether you've received a pay increase, some kind of promotion, or you just have a few years of consistent payment history with the credit card company, it doesn't hurt to give them a call and ask if you can increase your credit line. And this works relatively easily when it comes to credit card companies. You probably don't want to do it right before applying for some kind of loan, though, because it is likely to trigger a look at your credit score and things of that nature, which can potentially cause a brief dip on your credit score. So you don't want to ask for that credit increase right before you're going to also try to get approved for a home loan or a car loan. And like I said, it is relatively easy when it comes to credit cards, but it's probably not worth the hassle of trying to get a increase in credit line on your home loan, because that would involve completely refinancing your house. So unless you're actually in a position where you can reduce your interest rate substantially, reduce your monthly payment substantially, it's really not worth completely refinancing just to try to increase that particular line of credit. Unless, of course, one of those first factors apply, or you're planning on making some major home improvements, or potentially even purchasing a whole new house. So keep in mind, though, when it comes to the credit cards, if you are successful at increasing your credit line, the goal is not to generate additional leeway for spending. The purpose is to improve your credit score. So if you increase your credit line, you can actually reduce, provided you keep your spending the same, you can actually reduce the percentage of your credit lines that are being utilized. And although certain lenders might not look at the additional credit line in a positive light, at least from your credit score perspective, that is generally viewed as improving your credit score. Overall, though, I want you to remember that not all debt is bad. And I know a lot of people wouldn't necessarily agree with that. You want to pay off all your debt as fast as possible, and I wouldn't necessarily say that's always the case. In fact, debt can actually improve your credit score when it is used wisely. And your credit score determines how favorable the debt you have access to is. So this creates a nice circular reasoning that feeds on itself and it's something that you have to work on over time. As you build your credit score, you put yourself in a position to improve your debt situation and your credit lines vis-a-vis lower interest rates and higher credit lines, and then that subsequently improves your credit score, so on and so forth. And even though it is a long process potentially to improve your credit score, it is very much worth your while. And the faster you get working on it, the more advantageous it'll be, and the sooner you'll actually see those advantages. Now, as I mentioned, this was the last topic I actually planned on covering, and came up with it due to feedback from you all. So I'm happy to review other financial and investing topics. Just let me know what you'd like to hear about. And as always, if you have additional questions or would like to share some information of your own, by all means, feel free to reach out, post comments here or give me a call, shoot me an email. My number is 720-808-6979, and my email is sean.cooper@fitfinancialconsulting.com. Thanks.